Hey everybody, welcome back to Minds of Markets, our live stream down on the floor here. It's good to be back down in the S&P 500 options pit, though on a day today with not much activity whatsoever. Even though Powell just finished his testimony before Congress for the day today, market almost absolutely unchanged throughout the entire testimony, which is not typical for a Jay Powell interview or testimony. But market really is just very complacent right now. Today, very little volumes. There's some activity picking up a little bit here right now, but if we look at S&P futures volume on the day, it's barely 600,000 contracts right now, and on an average day we see about 1.5 million. So we're really just kind of sitting back, and I think now that his testimony's out today, and even though he's going to be before them tomorrow, the market is really just waiting on Thursday's CPI data. Friday is PPI, and then we start earnings season. We got some of the banks coming out at the end of the week, Citi, JP Morgan, some of the others. It was real interesting to note during his testimony to watch TLT, interest rates, gold, some of the leading, let's call it commodities or indices out there that kind of track the trajectory of rates at the time. And we saw TLT, which actually, let me bring that up here for a moment. There we go. We saw TLT, which is down about 60 cents on the day here. Don't want to end that. There we go. Okay, so right here, TLT, which is an ETF, which kind of replicates the 20-year treasury. Um, TLT, we saw really get hit, meaning when the price of a bond, and this kind of replicates the 20-year, when the prices come down, that means interest rates are ticking higher, and vice versa. If prices of TLT or prices of bonds are going up, that means interest rates are coming down. So we saw TLT actually hit a low of the day today when he was speaking at 91.87. It's recovered a little bit from there, about 30 cents or so. Same thing, gold. Gold, which had rallied back a little bit at the beginning of the day today, really sold off. And we can look at GLD, the ETF there as well. And if we look at GLD, that traded all the way down to 217.26. So that has rallied about a buck or so. We actually have an alert in, just those of you that are in my room, and whoever's watching right here, we actually have an alert in there at about 216.70. If GLD gets down to that area, that's going to be just ahead of the 50-day moving average here, and that's a spot that we would certainly look to potentially do something. So that's that area right there that I am looking at in GLD. Okay, what else is going on in the markets today? Earlier, massive call buying and put selling, both in Nvidia and in Tesla. Let's look at Nvidia first. So in Nvidia early on, 145 calls out to August. So let's take a look here. And remember, those of you that are still thinking of NVIDIA pre-split, that's 1450-ish. So you can see these on the tape and these were opening, and we know they were opening because they traded actually over the offer. So at the time, those traded for $3.85. And how many of those? About 600 of those traded in one fell swoop. And then we saw put selling as well. And let me show you how we know that these were opening as well, because, hang on, there we go. The big put seller in NVIDIA today, actually today's, or excuse me, this Friday's 131 strike puts. And here we go. Yeah. I mean, look at the volume in here. Those are all opening. So there's other options in NVIDIA as well, but again, lots of call buying, lots of put selling. Very, very bullish order flow. And then almost the exact same type of order flow in Tesla, folks. Let's take a look at Tesla up on the screen here. Okay. The 225 put expiring on August 16th. Okay, big sell order came in that we saw earlier on. Those are right here. And then we saw in Tesla the 260 calls expiring this week, expiring on Friday. Big, big buyers of those. And those were bought above the offer here. You can see all of this call buying in here. So lots of order flow there, call buying, put selling. Now, what does that mean? Maybe it's someone locking in their position. Maybe someone is really, really bullish. Who knows? We don't know what happens on the other side. And that's one thing that, I really want to point out to everyone. So many people that follow unusual activity. And what do we mean by unusual activity? Well, if we see something pop up on the tape, like what I'm pointing out to you, big order flow, something that trades maybe below the bid or above the offer, right? Unusual trading activity. That doesn't necessarily mean that the market is going to go in that direction for that particular stock, or if it's in the S&P for the overall market, because honestly, we don't know who is on the other side and what that person or what that institution, what that company might be doing on the other side. Maybe that's a hedge to an existing position already. So I think you really, really need to be careful out there if you're going to be following the order flow. Okay, sure, a big order can tend to move a market in the short run, but you just gotta be careful there, because remember, everything is two-sided, right? For every buyer there's a seller, every seller there's a buyer. So we have to be aware that someone's doing something on the other side. So I just don't want you to all get caught up in this unusual activity and think that it is the end all be all, because it's not. If anybody has any questions here, guys, along the way here, please feel free to pop in the chat here, because I'm happy to review any kind of open position you have, any stock you might want to look at, to review any sort of volume hitting the tape. So happy to answer any questions. Now, today was a big day because, again, Powell testified before Congress today. He's going to be there again tomorrow. I think he said everything he, already has set out. And I don't know if any of you are watching this, but watching something like this, it's probably like any board meeting that you might sit in on in your regular day-to-day life, whether it's a school board meeting, maybe it's from your local church, whatever it might be. Unfortunately, people like to hear themselves speak. And when you're watching this testimony, and I'm watching members of Congress ask Powell questions and try and drill him and criticize him, most of them, it's like word salad. It's going around in circles, and all they're doing is listening to themselves speak. But it's very important for us to watch this and hear any commentary that Powell may have said, because as we know, especially on Fed days, when there's a Fed decision, and there's one in a couple weeks we'll talk about here, that can really move the market. Today didn't move the needle at all, though I would tell you right now S&Ps are trading at their high of the day right now. So in summary, what did Powell talk about today? Well, the big question going into it, kind of like, when we were on a road trip with our kids and you hear from the back seat, are we there yet? and what does that mean? Are we there yet? Well, everybody's waiting for him to say, okay, we've seen enough evidence. We've seen enough sufficient data to suggest things really are slowing down, and we can really, when I say we, the Fed can start cutting rates. He didn't say that today. Maybe he was a little less hawkish than he has been in the past, but he didn't say that. So his response today and tomorrow, and then Thursday's CPI report. That's going to be the biggie. Thursday's CPI report. That's what's really going to move the needle on. Hang on. This. So as we can see here, I've got the CME FedWatch tool up here. This is a live in the market at the moment, what shows us the probabilities of what the Fed is going to do at their next meetings. So this one right here, this is the July meeting, which is July 31st, a few weeks out. And you can see basically 95% probability they're going to do nothing. They're going to keep rates the same, and that's what the market is pricing in. That's what everybody is, really looking to, and things are being priced to. But then we go out to September, and here are the odds now for September. There's about a 72% probability of a rate cut in September. Okay, so that's what the markets are looking at. That is all of the data that we've seen over the last couple months certainly suggests the economy is slowing down, labor market slowing down, unemployment ticked up. Everything the Fed wants to see, even though Powell said just today they haven't seen sufficient enough data. So let me give you a quick overview of what he did say today. Okay, he said first quarter data from this year does not support or give them enough confidence in inflation and its trajectory back towards their 2% goal to cut rates. Rate cuts not appropriate until greater confidence that inflation is heading there. Okay. U.S. economy is expanding at a solid pace, he said. I'm not so sure I agree with that. Jay Powell's a lot smarter than I am. There are absolutely signs of a slowdown. And what all of you have to remember is the data that the Fed looks at. So even CPI data that we're going to get on Thursday, that is a month in the rearview mirror. All of the data they're looking at has happened in the past. They're not looking forward. Okay, if we look forward right now, the economy has slowed. Unemployment has ticked up. So, in my opinion, this 72% probability for September right here, barring like some big blowout number on Thursday of CPI, that 72% should be closer to 100%. Okay, Powell also said the labor market has cooled but remains strong. And again, I thought he was still pretty hawkish, maybe not as hawkish as he was. I thought he was still pretty hawkish. So see what he has to say tomorrow. I don't think tomorrow is going to make a bit of difference after what he talked about today. But in addition to Powell, there are a lot of Fed heads speaking this week as well. A lot of other FOMC members that have leaned very, very hawkish. Maybe they'll shift. Who knows? Last week's jobs number again showed a very, very, very slowing jobs market. And if you recall, the May numbers that we got, so at the beginning of June, we got the May numbers. That was actually a huge surprise to the upside, okay, which something the Fed really didn't want to see. Well, if you go back to last Friday and we look at what the June numbers were, not only was June kind of right in line, but we saw April and May numbers actually lowered, revisions down by over 100,000. So again, this data that's coming out here, guys, to me, it is very, very supportive of rate cuts sooner rather than later. Okay, for Thursday for CPI. Okay, everybody know what CPI is, Consumer Price Index, right? It's a big number. It's a big number for the Fed. PCE, okay, the other number that came out a couple weeks, that's their preferred measure of looking at inflation, but CPI is a big one. And right now the projection is for a 0.1% overall increase month over month. Okay, 0.2% if you strip out food and energy. That's called the core CPI. So those are going to be the big headline numbers to watch Thursday morning when CPI comes out. And then we've got PPI, the producer price index, on Friday. Okay, now let's take a look. Somebody, Nestle, thank you. Let's take a look here. Carvana. Let's pull that up on the screen here. All right. Okay, here is a 1-year look at Carvana. Now, if I look at this and I look at this red line here, can everybody out there see the blue line and the red line here? There's the blue line, that's the 200-day moving average. This red line right here is the 50-day moving average. Can everybody see that out there? Nestle, can you see that? Want to make sure that that's coming through to everybody before I talk further about it. Okay, great. Thank you, Michael. Okay, so if we look at recently here, support, 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 support. What do we see here? We see a very, very a very long series of higher lows and higher highs, with this 50-day moving average being massive support. Okay, so if we look at where Carvana is right now, Carvana kind of in the middle of no man's land. Okay, so we're right here, so we're off of that high, but we haven't really come down. At least for me, we haven't come down enough to warrant a potential entry to the upside. So this red line right here, this 50-day moving average, this 50-day moving average is right around 111. Okay, current pricing is 124. Okay, again, right in the middle of the most recent high that we hit, 136-ish, and down to that 50-day moving average. So when I say we're kind of in the middle of no man's land, that's what I mean about being in the middle of no man's land. I really wouldn't do anything here if it came back down to that 111, 112 area. Hang on one second. I want to see what's going on here, guys. Actually, as loud as it's been since I've been down here, trying to pick up what is going on here. Let's see. We have looks like a January big call spread that just traded 1,200 times in the SPX here. I'm trying to follow it on the tape. Hang on one second here, guys. Can let me pan this actually. Let me go off the. I'm gonna step out of the camera here for a second. Can everybody see that live view now? That is right into the S&P 500 options pit here, guys. Can everybody see that? Okay, good. All right, so there's I'm trying to listen in. There's something going on there. There we go. Okay, anyway, back to Carvana here. If we got down to this 111, 112 area, I'm in. I want to buy something because to me, this 50-day moving average has acted as support over the last 6-9 months or so. Remember, how do we make decisions on what might happen? Well, we look at what has happened in the past, and we look at that, and we have to consider that and say, okay, well, if that 50-day moving average numerous times has acted as support, great, that's what I'm going to look at. Now, one thing further in Carvana that I want to look at is, okay, 111 entry area, potentially 112, to be bullish. But look where implied volatility is. Does everybody see this chart right here on the screen? This is implied volatility. Okay, so you can look at this. Cheap, expensive, and kind of right where we are right now. I would say Carvana implied volatility is higher than the mid-level. Okay, so that tells me in terms of strategy, I probably don't want to do a time spread, a calendar spread, a diagonal spread, because volatility is a bit high right now. Volatility has a direct correlation to option premium. When vol is really inexpensive, options cheap. When vol is expensive, options get much more expensive. Kind of right in the middle here, leaning a little bit towards the expensive side. I would look more at like a vertical spread, maybe even selling a put spread. If we got down to that 112, 111 area, that might be a good opportunity to sell a put spread there. And then we also have to keep in mind for Carvana, Nestle earnings are also on July 31st. Okay, thank you for throwing that out there. What other stocks can I look at for people here? What volatility can we look at? Because there's, even though the market overall in general is kind of quiet and volumes are not real big right now in the S&Ps and in the VIX, individual stocks are moving. I mean, we've gone through Tesla, we've gone through Nvidia, we now went through Carvana. I think Coinbase is one that is real interesting. Coinbase has just traded lockstep with Bitcoin. Okay, and this really goes into the next topic I want to talk about. Why has Bitcoin really taken a dump over the last few weeks, last month or so, right? 72, 73,000 we were at. Now all of a sudden we're down in the mid 55s and it seems like it's holding on for dear life. Okay, so here's the reason why. I don't know how many of you have heard about something called Mount Gox, Gox. Okay, Mount Gox was a Bitcoin platform back in the early 2010s, so 10, 11, 12, right? Okay. And there was, let's call it some nefarious activity that happened, and the platform was hacked. Okay, in 2014, the platform was hacked, and it was hacked to the tune of 142,000 Bitcoin. Okay, 142,000 Bitcoin, not $142,000, 142,000 Bitcoin. That's 10 years ago. That's 10 years ago. This happened in July of 2014. Okay, well, fast forward 10 years later, and there has been recovery of those coins. So the people that actually owned Bitcoin, these coins that got hacked from them 10 years ago, and they probably, thought it was lost forever, which I would have also, they're going to start getting these back. Those coins are going to start being released to them gradually. In fact, I think they've started already. All right, so think about if you had Bitcoin that someone took from you in 2014 and it was roughly $600 a coin. And now all of a sudden, someone is giving you Bitcoin at 55, $60,000 a coin. What are you probably going to do? Or what are people that are trading in Bitcoin or people that have held for a while or have Bitcoin, in their portfolios? What are they going to do? Well, the anticipation is these people for 142,000 coins, which comes out to about $9 billion. That's right, it's about $9 billion. Okay, 142,000 coins. That's like a free gift to them. There's a ton of selling pressure in the Bitcoin and in the crypto arena ahead of these coins being released. So you've got this massive pressure on Bitcoin, right? Hang on one sec. Okay, love it. Can't hear exactly what they did, but you've got this massive selling pressure in Bitcoin. Okay, and the fact that it's actually not lower is probably for the bulls out there really good news. It's probably really, in the longer term, bullish for Bitcoin. Bitcoin's down 20% just in the last month. And if you think of it, man, oh man, you lost it at 600. They're giving it back to you at 55,000. What would you do? Right? What would you do? I know what I would do. So that's what you're seeing. That's what you're seeing right now. 600 to where it is right now is about a 10,000% profit. Okay, so if you're thinking about Bitcoin and why, is it down because the ETF hype is over with? Is it down because it's just not the store of value that people thought? Is it down because it's, a lot of people don't believe it's even real? Okay, it's down right now because of the selling pressure that's out there. Okay, doesn't mean doesn't mean that it's not going to keep going down. We don't know what's going to happen. I'm just giving you the fundamental reason behind that. All right. Since we've been talking over the last 10, 15 minutes and S&P's hit their high of the day up 18, they're now back to just up around 7. Really pretty much where they were during the whole Powell testimony today. What other stocks do some of you want to look at? Actually, I had someone here that requested to look at DraftKings. Okay, let's take a look at DraftKings here. Okay, earnings are not for a while, about 3 weeks or so. Stock is down 1% today. So this is a pretty critical area right here, guys, something that I look at. Okay, look at where DraftKings is right now. And you see it just consolidating right here. And that is right underneath, just underneath this 200-day moving average. And let me actually focus in here. Now we've got it on a 3-month chart so we can see that a little better. So over the last basically month or so, this blue line, which is the 200-day moving average, has acted as major resistance for DraftKings, meaning that the stock can't break through it. That price right now is 38.07. Okay, so what does that mean? If you're looking at moving averages as one of your technical indicators, well, if the stock rallies back up to that area, 38.07, you may want to consider taking a bearish position. You may want to consider taking a bearish position. And the reason I say that is because we can see when DraftKings was trading right here around 45 and it came down and hit the 200-day moving average, it couldn't hold at all. It never bounced. It never bounced at all. It was like it wasn't even there. And then once it fell through, now it can't get through back to the upside. So that's what I'd be looking at in DraftKings. And one more before we skirt out of here today with our update. Somebody's asking about ARM, ARM Holdings. Okay, ARM again hit those highs that we had just hit the other day. Couldn't hold them. The trajectory, in my opinion, is definitely still to the upside here, but I think you have to be very, very careful because this is one of those stocks that if the entire sector starts to sell off, this one has a lot of room to go. But right now, the path of least resistance is to the upside. Volatility is actually kind of high in there in ARM. Okay, so you've got to watch that also. Option premium is kind of high. All right, everybody. Really appreciate you tuning in today. Glad to be back down on the floor right here in the live in the S&P 500 option pit here at the SIBO. Don't forget, Minds of Markets. You can tune us in on our YouTube channel, our X. You can find us on Facebook. We do this Tuesdays and Thursdays. And really appreciate you guys tuning in. If you ever have a question about anything, please don't hesitate to put it in the chat. Reach out to us, prospertrading.com. You can always reach out and we'll get you an answer. All right, everybody. Really appreciate it. Hope you're all safe, sound. Have a great trading day, everybody, and we'll see you soon.